Hello everyone, this is Juan Sarmiento and today is Thursday, June the 15th. We are approaching almost a month, a little under a month, that I started this series and it's turning out better than I expected. If you can set it up, if you've been following me, set your account statement to 30 days back and go scrolling down. You see that our first trade was here on May the 22nd. This is June the 15th. So we're 1 week away from 1 month. Yet the results, I think, speak for themselves, how great this has turned out. In the IRA account, which we started with $100,000, we have now $104,847. So almost $105,000. Profits of $488, $4,860, $70 thereabouts, which is fantastic. Imagine if we could keep this up, how much would it be? Well, let's just calculate in percent. Is 5%. So 5% a month is annualized will be 50-60%, wouldn't it? Which is incredible, to say the least. I don't know that this is going to turn out. I think it's partly because I chose a system by which I'm picking up stocks that are at the bottom and with high volatility and picking them up at the right time. So let me just show you a couple here that I'm planning for today. SPWR and KSS. So what are we looking for? I modified my scan query, or my stock hacker, as you would say, to look for stocks that are at a lower strike price, and that SunPower is one of them. And you can see that it's bearish because it's below the Ichimoku cloud. The stochastic is pointing down, so it would go down from here, but I don't care. Why? Because I'm selling options and the stock will go up and will go down. Okay, so what you care about is that the volatility will be high so that you are selling a lot of extrinsic value. So let's go check SPWR to the Analyze tab, and suppose that I enter here we could enter the 111. That's the one with 0 extrinsic value and 71 intrinsic value. Okay, so I have it here. Let me start this over, okay, so you can see it. So I click here on the bid. Okay, so that's what I'm selling. How many would I sell? Well, the stock is 11, so if we are going to use $10,000, $100,000 is our account, so 10,000 will be our maximum that we'll be willing to risk. So I would say 9. And this is telling me that extrinsic value, because this is 0 intrinsic, this option would be giving me $612. Okay, so I go here to my spreadsheet and I say SPWR, I enter the price, which is 11.30 or thereabouts. The price of the option is 67 cents. And I'm selling 9, so I enter a 9 here, and that will give me 900. I multiply the option times 9, will give me $603. That's the calculation here. But if this stock was worth $100 with that kind of volatility, because it's a percent thing, you multiply the price of the option times 100 and divide that by the price of the stock times 100, gives you how much value we would have regardless of the actual price of the option and then we compare those two and say this is better than I would expect, okay, because I'm expecting $592 based on the price of the stock, not on the price of the option. The price of the option is a different thing. Yeah, it is based on the price of the option. So I'm just adjusting it to make it 100. So if it was 100, I will get $592. That's great. Okay. All right. So then we will do the covered call on that. It's now 71. It's going up a little bit, which is good. Cover stock. And enter the price, the extrinsic value here. You can enter any value between 68 and 74. Okay, so let's say, okay, I'm going somewhere in the middle, 71. Okay. So then you multiply. Here we know that the price is 71 cents. Let's say 71 cents. And we're going to subtract that amount from the price of the stock. Okay, so it's $10.60. And that's what I get here. Okay, so that's a fair price. I'm going to lock it in. And now we'll create duplicate order, confirm and send. I'm going to say multiple accounts. And then here we can see how much our buying effect will be. What if I did 9 or 10? If you do 10, it would be 10,600. So that's above my 10,000. So I'm going to go for 9. And I will do exactly the same thing for my margin account. Okay? 9. That's how we enter the trade. Note that the buying power effect of the margin account is less than half of what it cost me to do it in the IRA account. But the bottom line is that we can do 10 trades in a margin account. Be aware though that if the stock declines too much, you might get a margin call. Let's set that off. And I presume you would talk to your, talk to your broker about this, whether that's wise for you to do, whether your experience warrants it, or whether you should have just a simple IRA account or a cash account without any margin to it, and then you pay the $10,000, but you won't get a margin account. You don't essentially bid more than you actually have. Okay, let's do the KSS the same way. That's calls, analyze. Let's take a quick look at the chart. Okay, so you see that the stock is up right here. With the rest of the market, most of our trades went up. Now we're going to see what happens when the market pulls back a little bit, maybe a lot. Okay, are we going to lose money? Well, yes, but you will always keep that extrinsic value, and then the market goes up or down, you always collect that money, and then eventually the stock comes back up and you'll be fine as far as the stock price. The only thing that is, again, if you do it in a margin account, you might get a margin call, so you would have to have some cash on the side in case that happens. Okay, KSS, go to the Analyze tab, and we're going to enter here the price of 0 intrinsic value and 1.19. So yeah, 1.19 sounds good. Again, we would enter 1.19. And that multiplies how many times? 5 times, because yeah, I presume 5 times. Okay, so let's go to the here the price 23, 15. The price of the option is 119. And how many times you multiply? 5 times, presumably. Okay, so yeah, the price of the option, yeah, we will get $595. And if it was 100, yeah, so that looks good. Okay, that's a good price. And then we subtract 123, 23, all right, 23.15, which is the price of the stock. And subtract 1.19, so our price is 21.96. All right, 21.96 and times 5 is probably a little more than 10,000. Okay, so let's see. So I can put here 196. That's my bid. I might alter that. Create duplicate. Confirm and send. Multiple, so then we can see the price. Yeah, 5 is too much, so let's put 4. And then again, our price in the IRA is 8,700 and the margin is 4,100, so about half, less than half. Let's send that off. And wait here until they get, I could make some adjustments. Yeah, the SPY, SPWR got filled. KISS will be shortly, so I'll keep an eye on that to make sure that it gets filled. I may adjust it up to 99, 21.99. It's 0.98, so it's 2 cents away. So I'll keep watching it, and I'll raise 5 minutes later. I could raise the price, adjust it a little bit. Okay, that's all for today. Thank you very much for joining me. See you next time. Bye bye.